All right, y'all. My first live day in the life of a money manager. I thought that might be a cool theme. Um, um, yeah, I'm just gonna live stream while I work. I mean, and then every now and then I can share some of my thoughts on uh, my work and things of that nature. But just wanted to try this, see how it works. I've been trying to different formats, and I think this one with no edits would probably be a format that is most suitable for my schedule, just because all the editing, I don't have an editing team or anything like that, and it's really difficult to share, create content and have to edit it all the time. So I thought it might be interesting to try live, see how it works out. If it works, great. If it doesn't, then I do less of it. But I thought it might be interesting for people to see what I do on a daily basis. Obviously, in terms of what I do, it's pretty proprietary. I spend a lot of my time researching stocks and individual companies, which is basically the main thing that I do on a daily basis. And obviously, running tails. I got my TV on over here, getting ready for that Niners game. But split view makes it easier. Put pages side by side in the same tab. Show me how. Oh, right click on this tab. Split view with current tab. Oh, that's crazy. Okay. Yeah, that's cool. I don't need to do that right now. And so I won't be sharing my screen or any like stock ideas and things like that or anything like that. But yeah, I mean, I thought it might be interesting in terms of I get a lot of questions, especially from young people, in terms of what do I do, how can I get started, things like that, and um, my recommendation is to read books, investment books, pick up some investment books, and kind of if there's any courses that you can take in high school or college in terms of accounting or business courses, economics courses, that's sometimes um, can point you in the right direction as far as if you like the topic or not. And the other thing is just to do it. I mean, I think a big thing is just to do it. I mean, find a few stocks that you like, start a paper portfolio. And I would say this for adults as well. If you're interested in money management and you think you can do it and you think you can manage your own money, I mean, there's no problem with having kind of a smaller, I guess, a smaller portion of your capital, maybe play money is what they call it. And the amount just depends on the person. And so just have some play money that, maybe 1% of your funds or smaller that you can experiment with. I think even better before that, especially for the kids who don't have a lot of capital, or the teenagers or the young adults that don't have capital, start a paper portfolio and start seeing how you do against the S&P 500 and things like that, and be honest with it. Um, but there's a lot of good paper portfolio. I think I think Yahoo has one. I haven't done it in a long time, but there's a lot of paper portfolios that you can start on a lot of websites for free, and you can start to measure how you do in relation to um, the general market, which nowadays is the S&P 500. So I would definitely try and do that. But yeah, what I'm working on today is uh, I mean, administrative work, a lot of administrative stuff I have um, that I'm working on as a as someone who not only manages money but manages a business. And as far as the business side of things, that I've had experience with it before, and there's a lot, so you're gonna see me do a lot of stuff. I got laundry going right now, so this is my home office. So I got my TV on. It's on low because I don't think I can. I just like having. I just like. Uh, I usually have CNBC or something on, or right now I got some sports on. Just to keep me in the loop on things, so I don't feel like I'm missing out on too much information, uh, helpful information. But yeah, I mean, again, I'm just trying out this live, seeing, you know, I feel like nowadays the young folks see how long they can go on a live. Sometimes they do, like, they're proud when they do a 48-hour live or something, and it's pretty interesting. I mean, I'm not that old. I think a lot of um, a lot of people are like, um, you know, if you're anything younger than, I feel like 35 nowadays is considered an unk. I think it depends on your age, or what you're doing, and what stage you are in your life. If I'm playing sports, at 41, that's pretty old, although you see a lot of strong people still doing it. But my point is, you're going to want to, as far as age and who's an unk, I mean, especially, in money management, you're still a baby, so wherever you're at in your career, I mean, if, let's just say, you just started working, at 20, most people work till they're 65. So, most people don't start till probably 25, 30, maybe if you go to college. But the point is, you still got a long way ahead of you. So as far as working, it's not as though I'm retired, so. But with that said, I mean, this type of stuff is new. Live is new. I mean, I think most folks my age aren't used to that, mainly because back then it was like, to record a video or even take pictures, especially on a phone or something mobile, took a lot of space, memory, and that's just not even an issue anymore. It feels like, or it seems like. And so a lot of people, that's the new thing that I'm getting used to. I just, I didn't grow up on an age where you can live stream for many hours, and you could, and where you could do that and store it anywhere, But now I'm using, what is this? This is YouTube. And I think after I'm done with, I tried this on Facebook with trading T-bills, not trading, but kind of rolling T-bills. And I think Facebook deleted it because I don't know if they're supporting that anymore versus YouTube. I mean, like I said, I'm trying it on YouTube now to see if it will not only do it, but will support it and then post it and then keep it for a long time. I mean, the whole point is for people to be able to reference back to it. I think you can see a transcript, and you could probably nowadays people probably look at it and go right to the parts where they feel like is helpful to them or informative or something like that. Because most of the live, especially in money management, I'm really just doing my own thing, like administrative work. Like I said, like right now I'm making trades, and I'm just all the trades I've made in a week. I'm making sure to document all that and account for all of that, and all the cash movements and everything that happened throughout the week. So there's a lot of I would say this stream is more built for that. That perspective in terms of the administrative part of things, because that's just as much work, I feel like, or more. That was what was more shocking to me of starting a business and things like that is there's a lot, you just kind of have to learn on the fly in terms of managing a business outside of the skills. I feel like I learned a lot of money management skills over the years, but managing a business is another animal completely. And that's why a lot of people don't do it. And you got to love what you do. Otherwise it's going to be a lot of work. You're going to wake up every day feeling like, holy crap, I have a mountain of things to do. And if you don't like it, you're going to feel crushed. I feel like, and so I really encourage people, and young people especially, to do what they love, because at the end of the day, even when doing what you love, you're going to be in situations where you find it's challenging or you don't like certain aspects of what you do. And so I think that when you are met with a lot of these challenges and obstacles, what's going to keep you going? It's if you love the topic, you love the subject, or whatever it was, or whatever it is, right? So when I was really young, I used to collect cards, like basketball cards, and it became an obsession. So there's nothing you could do to keep me away from collecting basketball cards or playing basketball. I love playing basketball as well. It was a passion of mine, sports and basketball especially. The Kings right here, part of the inspiration, but a lot of it was family. That a lot of my family was into sports. Whether it's my sisters, my brothers, we played volleyball, we played anything you can think of. We had a volleyball net in the backyard, a basketball court, a basketball hoop in the front yard. And it just became one of those things that it's a non-contact sport, so it is you can play it without busting too many brain cells. Although I love football now a lot more than I did before, especially college football got me into pro football. Although I always paid attention to the Niners growing up because my neighbors were Niners fans, and everybody around you in Sacramento was a Niners fan, either a Niners or a Raiders fan. And I just know that the people in my neighborhood were all Niners fans. And this was the era of Steve Young and Jerry Rice and all them. So they were winning games and doing well. And so you'd hear about it. Growing up, we didn't have cable, so it wasn't like I was watching it on TV or anything. But we had the Sacramento Bee, we had a subscription to the Bee, and or did we? Maybe because my older brother, probably because he did paper routes. Maybe that's probably the reason. But I think we had a subscription to the Bee. The point is, that's how you got informed. I never watched the games live, so it's really hard to build fandom when you haven't seen your favorite players play live or your favorite team play live. And growing up, I never had that chance. So, and I rarely went to Kings games and things like that. But I got to go to one Kings game. It's just the Niners are especially far. They're in San Francisco, so that wasn't going to happen, on a budget, right? So, but the Kings games, I had friends who were fans, and my first game, one of my middle school friends took me to a Knicks game, and I'll never forget it. And I will say this: I was so loud. I remember being so loud after every Kings game. I would go home and my throat was sore because I don't know. It just uh, you would yell your head off in Arco. You didn't have these booming sound systems, so and people were loud regardless of uh, the booming sound system. I mean, that's when the cowbell started and all that. So I feel like, now in Golden One, it's a different vibe. And I talked to a friend who grew up going to Kings games at Arco as well, and he was like, "Yeah, nowadays it's loud because of the booming sound system, not so much because of um, the crowd." And I noticed the same thing. Like at Arco, I never had people who were annoyed, and I never saw a lot of people from the opposing team. Um, but I never had people who were like, "Yeah, you're too loud," or the cowbells. That's a little annoying. But nowadays, there's so many people on the other team in the arena, and I think a different crowd as well. That I honestly don't think people are as loud. They don't cheer as loud, which is fine. Maybe I was just more youthful and I'd yell my head off, but everybody I feel like was kind of doing it. And I was like I said, I was a big basketball fan growing up. Played basketball, organized basketball as well. So it became a love of mine. But anyhow, I'm gonna keep this live going. I mean, I'll probably edit some parts of it, but I may go silent every now and then because that is really what a money manager does on a day-to-day basis. Is they I'm researching a lot, doing a lot of research. So, but yeah, welcome to my live. I might, I don't know. He said I could share this live stream to Facebook or something, and I don't know how it even works, honestly. But the main thing is just record when I can record and try to post content that people might be interested in, and I might be able to cut it up. But the editing part because I have a podcast that I started, and I was, I have a lot of things I want to say on it. It's just the editing stuff is just, it's another job, you know. So it's like not, and that's not how I make money. I mean, to be making money on social media, I literally don't know anybody in my personal network that's making a living like through social media. And you read on the papers how difficult that is. Half these content creators are not making it, so I don't expect to make a living or anything really off of social media content or anything like that. It's more just, it's posting things that people might be interested in, and whatever happens is, I have fun with it too, right? So sometimes I'll post music, sometimes I'll post other things, but yeah, I did. Yeah, again, I wanted to try this live. It's obviously there's nobody in here, but the point is so I could post it afterwards as well, maybe edit it, and things I find helpful. But I probably won't edit it because it just takes too much time, So join me in my day, and if I'm able to say some things that help people on the learning journey in terms of investments or anything, that's great. It's probably difficult to do this during market hours. Which today's a Saturday. It's not market hours, although the Niners play at 5, so I'll be watching that. I do have laundry. Like I said, I think I told you I have laundry going, so I'm going to check on that in a bit. But yeah, Saturdays are errands and for catching up. So I'm going to minimize this a little bit. I don't want to completely forget it. It's just, it's one of those things where it's like, I do want to let people into my life and all that, but it's like when you forget about the cameras, what happens then? Well, you're just going to be who you are, and hopefully that's good or bad. But the thing is, once it's live, it's there, but it's up to you to post it or not, and whoever sees it live, I guess. I mean, that's the new. It's just like I said, I don't even have any problem with the format. It's just this would never have been possible back in the day. Like just live stream yourself and posting like a 2 hour. I guess some people are posting like week-long lives or 2-day lives. I don't know, the big streamers. And I got football going on, so you may see me turning around and watching football every now and then. I'm not gonna turn up the volume too much because I think they would shut down my live, or at least that's what I googled. That that might happen, because it's paid, content that I pay for and I didn't create myself. But yeah, right now I'm just, like I said, documenting some of the trades that I made. This is my other screen, by the way. And yeah, you're just never going to hear me talk about stocks, individual stocks, because it's if you've seen my podcast, I'm about indexing, and if you did index, now I'm gonna take some credit here. If you did index, I don't know, the past 3 years, you would have averaged with dividends like 23% a year for the past 3 years. And I talk to people, I won't say who, but that are like, oh, well, it's not enough. And that's when I'm like, man, that's insane. Like, it's people are listening to Jim Cramer like way too much, and I don't have a problem with that. Like he says though, like he does this because everybody's got a little funny money laying around that they want to invest on their own. That's why, and he's got, like I've said on my previous podcast, he's got a team of attorneys around him. But it was a real big, it's a big liability to recommend individual stocks and they don't do well, or they do well, but you sold too early. So it's like, it's not just, hey, buy this stock or sell that stock. It's when do you buy or sell the stock? That's the issue. And especially nowadays with the market the way it is, things can overshoot and things can undershoot by a mile on a daily basis, and it's frenetic, really frenetic trading. And I don't think that's going to change. I think the retail investor is going to continue to have a bigger and bigger role in markets. I think people just need to be used to that, whether it's meme stocks or whatever else. You have to kind of adapt though. It's just, it creates a kind of a casino of sorts in markets, which I'm not a big fan of. I'm not a big fan of it. But it's just, there's prediction markets now. There's all this stuff going on, and people got to be careful. Especially the other thing I'm hearing about is people taking online advice. That's that's I don't know if that's a good idea, to be honest. Let me see here. And so I'm gonna have to. I may forget the camera's on. I don't know if that's a good thing or not. I don't even know how to share this live stream. Oh, here it is. Share. Okay. Let me see what happens if I click on this. Anyway. Yeah, I'm trying to figure this out. I guess I'm gonna turn down this volume. Yeah, I might share it to some other social networking things in the future, but I kind of want to give this a trial run, just like with nobody here, maybe. And then the biggest thing is it can be posted later. I think it gives me an option to post later, so I'll figure all that out. But I don't need like this big, huge crowd right now, just in case I mess up. um, but it was interesting. Uh, so anyway, yeah, I'm like I said, I'm oh, keep it on real, real low. Hmm. I'm in Excel right now, and like I said, reviewing all my trades for the year. Really, I mean, it's I got expenses as well that I got to keep track of. Um, got a bunch of receipts. You want to see them? Got a bunch of receipts that I have to document. I don't have I'm my own bookkeeper, so I keep track of all my books and receipts, and a lot in Excel, a lot in QuickBooks. I keep track of all the money movement and all of the stock trades that I do and things of that nature. So it's a whole nother beast, the managing a business part of it. So, um, but it is something that you learn on the fly. I mean, and I got a really good team as well. I mean, I have an attorney I work with, and he's great. Um, he's very, very helpful. Understands what I'm going through, and has a bunch of connections that I can reach out to, and I have reached out to them, and um, but the money management field in general, especially what I'm doing, is it's a very small community, if not, I would say it's small, but it's more than that. It's like I don't know. It's more than that. It's small, and it's there's virtually like for example, I don't know many. It's just what I said earlier. It's like, do you know many people in your personal network making money off social media? I don't know many people, you know, who's running a money management firm by themselves, you know, or started one. I don't know many. I know some. Um, but for the most part, it's not this like huge community. I think you have to learn from, in my view, industry people, and on the fly talking to people as well in the industry. So, um, let me see. Yeah, I'm looking at. Well, right now I'm looking at because I have really big networks on Facebook, on LinkedIn, and like I said, debating if I should share it, but we'll see. I mean, I'm just gonna keep working um, on the administrative stuff I was talking about. What I can share is I've been looking at a lot of international markets. Um, I do think that there is, well, I mean, this current administration has been pretty adamant about getting a new Fed chair in who's going to, lower interest rates and things of that nature and make for a more accommodating, they call it a monetary policy. So more accommodating monetary policy, meaning lower interest rates. And we're increasing deficits, meaning on defense and things of that nature. And so um, the administration has argued that they've been striking a lot of deals as far as tariffs and just investment in the United States type deals. And the hope is that this growth and investment in the country will sort of overcome any negatives about tariffs, which, as we saw when they were first announced last year, and they were obviously a lot of them were rescinded, a lot of them were implemented over time again, a lot of them never got to where it was originally threatened. And if it did, it was again based on um, uh, over time. So, the administration seems to be very willing to withdraw any tariffs or go back on any tariffs that they originally proposed. So, Let me see what this looks like real quick. Yeah, let me post it to my LinkedIn or my Facebook. Maybe my Facebook. Yeah, let me see what happens. I can post it to my Facebook. Oops. All right, I'm gonna check this out. I'm gonna post it to my Facebook. And my LinkedIn. I don't know. Save as draft. Yeah, we'll see. I don't even know what to title it. Was it a day in the life? Because I mean, I'm going to talk about all types of topics, but well, not really. In between things, I guess it just depends. But again, this is about um, sharing helpful content if I can, and um, and just reminding folks like where we're at in terms of I've reviewed actually a few things already, but as you know, as far as the market and things like that, I still think people should be invested long term, mainly in index funds. Really, all through you would have done very well in the past 3 years had you invested in index funds, S&P 500 index funds, and things like that. You can easily find those online. Again, I really try to stay away from recommending individual products because that's really not the point. The point is, how do you make the most money, and the best use of your time, um, given that um, uh, given that you have money to invest, whether it's in your 401k or your retirement plans. And so, if you watch some of my older podcasts, they review that, but it's a little boring because that's all it really goes over. It's not like Mad Money Jim Cramer um, type deal, which I don't really have anything against that show, but it's a lot of entertainment there, and I'm about making folks money and solid money, and even if it's boring, I think that's the best way to do it is to be contributing to an index fund on a regular basis, whether it's up or down. Um, but as far as where the market's gone, it's kind of been a very concentrated market as far as last year, um, which is a little scary because it was even more concentrated last year than the year before that. You're starting to see it broaden out to the more general market, but who knows? Who knows what happens? The point is, if you're indexing, like buying an S&P 500 ETF or a fund, you're not gonna have to worry about any of that. You don't have to worry about the ups and downs. Just whenever you get your paycheck, you know, you should be whatever saving 10% of your income, and on a regular, and whenever you get paid bi-weekly, monthly, whatever, you contribute a little bit to your 401k or retirement account or whatever it is, and hopefully it's invested in index funds and not active funds. And that's what I continue to, I guess, be a big fan of. And that's what I continue to encourage folks to do. So let me see how this works. You might see me repeat things throughout the line because it's like this thing is probably going to be 3 4 hours. So it's one of those things where I may repeat some things because I don't know when people are tuning in or whatever. But um, um, I may be repeating some things, but for the most part, getting right back to the next topic. Whatever, whatever's on my mind as I am working throughout the day. Obviously, if you can't make the live stream, I plan to post it. This is my first one. I didn't schedule it or nothing. It's just, and I think it may help my investors, who want to check out what I do on a day-to-day basis as well. But yeah. Yeah, like I said, I've been getting into international stocks. Um, and as good as the US has done, international markets have done better. Certain select ones, and that's partly because the dollar has weakened against a lot of currencies, due to I think some of the policies and the deficits that we're running. I mean, that's why you're seeing gold and silver rally as well. Um, but it's yeah, I mean it's a my TV on here. Like I said, I don't even know how much volume I can turn on because I'm like, so the Bills Denver game is on. Not gonna miss this. Let me see. Yeah, still figuring all of this stuff out. I mean, there's a lot of uh, sure, there's a lot of technical stuff that I'm figuring out on this thing. But yeah, messing with QuickBooks right now, and like I said, just doing administrative stuff. And this is it's what keeps me busy. This is the beast part. The beast part of managing a business really is, some of the administrative stuff because you don't really get training for like how to run a business anywhere except by running a business, so um, it's it's exciting and scary. Not scary, but it's exciting. I think it's really exciting. It could be scary, but I think again it just really boils down to if you love your subject matter, then it's you're not going to mind all the setbacks and you're not going to mind all the learnings that is inevitably going to happen. But anyhow, I recently sent out a letter to my investors for an annual letter. Um, and what I'm doing now is all the supporting stuff as well that I'm going to send to my investors as well. So I try to communicate with them and send them as much information as I can so that they can understand what the fund is doing, what their funds are doing, and how they're performing and things of that nature. See with the yeah, I'm just double checking a lot of because I keep record of my own books and things like that, and in accounting, if you miss one line, everything's off. So I'm seeing that I forgot to enter in whatever it is, an expense, a transaction, whatever it is in accounting. If for anybody who's taken an accounting class before, if you miss, I mean, it should balance out to the penny, and I was always so annoyed when I took accounting classes because I was like, why am I doing this? Like, don't they have software for this? Yes, there's software, but it really helps to know to work through now that I'm running my own business. It really helps to know the T tables and how it balances out and all that stuff, because the software will only do so much, and so you really need to know how the software works, what's behind the software, right? I think, yeah, I mean, so it's it's a pretty tedious task, but like I said, if you like it, like my first accounting class, I think I got an A. So it's, of course, when I retook it in business school, I was like, why am I? It's like I felt like honestly, and everybody's going to have a different experience in school and business school and things like. I think education will only get you, especially in something like business. I think I always prioritized, at least for me, getting that experience, going out there and doing it. I mean, not to go out there and like just fail as fast as possible, but my first foray into business was in real estate, and I learned a lot. It was during a lot of the real estate bubble, and so I learned a lot from that, and I talked about that um, i- to the business schools and the employers who ultimately hired me, and I think every mistake is a learning opportunity as long as it doesn't take you out. So it is one of those things where I've always prioritized that. Like, how do you get better at something? And whether it's, break, I call it break dancing. The Olympics call it breaking. Whether it's breaking, whether it's basketball, whether it's snowboarding, it's by making a million mistakes. And that's one of the best ways I've learned. And I think business is the same way. And so I struggled in business school, and a lot of my classmates probably saw me, um, uh, maybe they saw me, and was like, man, this guy's struggling. And I probably was, because I really am the type of person who likes to go out there and do it. It's just, I already had an undergraduate degree in business, and once you get a taste of business and you like it and you love it, you want to keep doing it, and so, while I was in business school, I had always managed money on the side, you know, and it took up a lot of time. Um, but that was my passion. That was my first love. Even throughout my career at Bank of America post MBA, you know, I worked on my hours, of course, but at night, this is what I'd be working on, my accounts. It was never formalized until obviously I left the workforce. Like I left my last employer and started my own business, and that was when it was formalized. That's when I learned all this stuff. So, but what I'm doing now is a product of what I've been working on for probably 15, 20 years. And so, you know, uh, it's like, oh, well, why would it take so long? Well, everybody, moves at different speeds. But for me, when I graduated undergrad, I graduated into graduated in the real estate bubble. So, um, that was, that can be a big learning experience, and that can set people back for a really long time as well. And so, but you learn from it and you get better. And so, um, you know, and I keep looking over here because my work is over here, but so you get better, and, but you never forget, like, um, what your vision is, what you want to do. And so, um, even at B of A, I was doing mortgage, I was doing small business, I was doing a bunch of things, and I don't know, it was just, I don't know, you know, and I'll always be obviously very grateful to Bank of America for allowing me that opportunity. But I got an opportunity at money management of all things, and I never thought it would happen. To be able to have the opportunity to get formal money management experience, and B of A gave me that opportunity. And so I'll I'll forever be grateful to the people who allowed me that opportunity, because that allowed me to do what I'm doing today. Either way, I was going to do what I do today. But I would say having that formal money management experience, which is really difficult to break into, by the way. That's why I was like so shocked when I got the opportunity at B of A. But I would say that was really helpful. It was very, I learned so much. It wasn't even about the pay at that point, because you have to imagine I was sort of a division manager of Northern California for mortgage, and then I dropped down to like an analyst role in money management. They called it U.S. Trust at the time. And so some people say, "Oh man, that's just such a step back." But for me, it was like a dream come true. I didn't care how much I was making. I felt like I had made enough at that point. I had done very well in sales, and so, um, I knew I could probably go back and still do very well in sales. And so why not try this? And one of my biggest heroes, Warren Buffett, has always said, but this is for people who just started, not people who were like, sort of in a mid manager. Some may even say senior manager role. But I didn't care just whenever I got the opportunity. But he's always says, don't worry about that. Don't worry about your salary, worry, or how much you get paid, and don't let the dollars blind you to solid learning opportunities or what your passion is, and that type of thing. And I've learned that myself, and it only, that advice was incredibly solid, obviously, with me taking a role in money management. And it wasn't an analyst role at that point, because I had done some small business work as well, which is a lot of credit analysis. At least that was, and I was training to be a manager essentially. And so do most business bankers in my role, were they, doing credit analysis? No, but in order to be that manager role, a lot of them have credit analysis experience. And so I took it upon myself, and the people who were mentoring me, really had me focus on it too. So I started I would say an associate role. There's, I guess, analyst and associates and things like that. And then portfolio manager. So analyst, you're like doing administrative stuff and getting coffee, things like that, just getting your foot in the door. Associate, you're helping with trades. You're helping, depends on who you work with. I worked with a couple portfolio managers who were individual. They would pick stocks. And so I would do a lot of stock analysis for them. And I would say they were very helpful for me in terms of allowing me to learn about modern day investing. And so the typical, I would say, I learned from Graham and Dodd and Buffett, but the thing is, it's changed a lot. And I think it's gotten to the point where you have to be willing to pay. If you see a good opportunity, you have to be willing to pay for some growth, which the traditional value investors back in the day, call them value investors, it should be investors in general, but the traditional value investors back in the day they wouldn't pay for growth. They wouldn't pay for growth, and they didn't have to, and they could still do very well. Nowadays, I think there's such disruptive companies in the stock market, and they grow so fast that you kind of have to be open to paying for that, paying a fair price for that. And it's actually covered in the most recent edition of Security Analysis. It's, I think, the 7th edition, but the most recent edition, it's been updated recently. Pretty big updates. Not big updates, because the principles are the same, but the commentary, there's a lot of commentary that from prominent investors of today that are that's in there, and their commentary is really helpful. And it's I recommend folks who are, well, first of all, I recommend folks who are just starting to read The Intelligent Investor by Benjamin Graham, with commentary by Jason Zweig. So that's even The Intelligent Investor has been updated. And then if you're really hardcore, because I'm getting a lot of questions on valuation and like how to go about valuing stocks. And, if you're really hardcore, pick up Security Analysis, the most recent edition. And I think that'll keep you busy. If you're really passionate about it, you read through it and and stuff like that. And, you know, a lot of the training I got in my MBA program actually helped me understand the seventh edition a little more in terms of projecting earnings, cash flow analysis, discounted cash flow method, things like that. But if you read the seventh edition, the updated one, you're going to see a pretty simple way, or a lot easier way, to analyze things. And I think a lot of modern day value investors are doing that. So highly recommend it. Highly recommend it if you get a chance. But yeah, like I said, I forgot a transaction here, or to account for it. And I'm gonna need to account for it. Like I said, it's not all. It's called a day in the life of a money manager, right? So it's not all Jim Cramer stuff. By the way, Jim Cramer, I think he got his first start in like sales and like financial advising, which is fine. It is a little different from like pure money management and investment management. If you're in a sales role, your main thing to do is to go out and get clients and be client facing and answering to clients. A lot of times when you're in that role, you have, you know, direction set by whatever, chief investment officer or something like that. And they have proprietary portfolios and funds and things like that. And the preferences that you're in funds, and not necessarily in individual, stocks, but, and I know Jim ran money for a while. I don't know. It's just, when I was looking through it, I was like, and you don't have to, but it just didn't seem like he had formal training to pick stocks. And it makes sense because of the way he presents it. It's like this, game. It's like, I'm not here to hate. I'm not here to hate on Jim, by the way. I think he's fine. But I'm just shocked sometimes at what he says in terms of, indexing is not enough for a lot of people. He goes back and forth between saying indexing is not enough, so people, need to invest on their own, to saying, most people just have fun money anyway, so that's what I'm helping them with. So it's like, which one is it? I think, and I've heard then people repeating it verbatim, like, well, indexing is not enough for me. 20% wasn't enough for me, and I'm just thinking to myself, that's crazy, because 20% a year for the last 3 years is exceptional. I don't know if I actually don't know if people should expect those type of returns ever, so I think I was shocked. I actually wasn't shocked, but I would be shocked if you continue to get those type of returns going forward. So, because 20%, that's really killing it. The rule of 72, right? 72 divided by the interest rate, is the amount of years it takes for your money to double. So at 20 something percent, the rule of 72, your money's doubling, every 3 to 4 years, so, I think, that is an exceptional return by any measure. So Just letting folks know that. And you're welcome if you did watch some of my podcasts. And I posted one actually in May of last year. And I was like, hey, whatever your political beliefs are, what's important is that you stay invested. And had you done that, you would have done very well last year. And so, if you were picking stocks, it would have been a very challenging year, in my view. But yeah, you're starting to see the market broaden, or I am. So let me do a little work here, mess with this transaction. The other reason why I'm posting, people are always so curious in terms of like what I do. I get that question a lot, and they're always very interested. And I think there are like many aspects to what the modern day money manager, at least what I did at U.S. Trust. They call it Bank of America Private Bank. But I think I view it as like, so the modern money manager, or if you're a portfolio manager, let's just say you're a portfolio manager, you're maintaining the portfolio. Actually, once you're a portfolio manager, you're spending a lot of time with clients and reviewing their portfolios, things like that. So, my setup's a lot different. That saves me, that allows me to focus, almost exclusively on running the business and then finding the best investments for my investors. So, but hold on, let me knock this one out real quick. T-tables, you gotta love them. And QuickBooks doesn't have T-tables. QuickBooks has, like, they call it general journal entries. And if I didn't know my accounting, it'd be a lot tougher. That doesn't mean I'm not reviewing individual concepts, but I love doing this. It allows me to. It's almost like, I don't know. It's almost like a journal of everything that I've done, expense wise, activity wise, everything. So it allows me to review my year. And that's kind of what I'm doing. What the heck? Hold up. If y'all have ever tried to balance some books or done T-tables, you know what I'm going through. If you haven't, trust me, it's fun. fun. It's fun times. If you like it, it's fun times. If you don't like it, it's like eating broccoli. It's probably eating broccoli either way, to be quite honest. But I think if you enjoy it, you won't see it as such a chore. I was going into it earlier, but I'll continue to talk on it. But international stocks, U.S. stocks, U.S. dollar. I think that's going to continue to be a theme, going forward, just where things are headed. But for most investors out there, all I can say is continue to stay invested, continue to contribute regularly to your index funds, and don't listen to Jim Cramer. You got to understand, like, half of what he does is entertainment. So, so be careful. Like I said, I think I'm gonna, we'll see what works. But the podcast, honestly, they just, and I know it's easier for people to digest, but just takes too much time, and it doesn't fit what I do. Which I make a living off of managing money. I don't make a living off of creating social media content, but I do enjoy making it, and I do enjoy helping people and posting content and things like that. But that's that's I think if you're trying to make money off it, you got to really like dedicate your whole. It's got to be like a full-time job. I was watching this interview by Mr. Beast, and I don't know, half these content creators are doing some bizarre stuff to get attention. Some are crying online. Mr. Beast was counting to like 1,000 or something. Like, I don't know, some god awful number, a billion, or I don't know, something ridiculous when he was like really young. And this is how he got followers. But the point is, this is what he does all day, and that's how he makes his money. And he makes a lot of money doing it, but he also loves it, and he's dedicated his whole being to it, which, I think that's great. I just, I know I gotta do what works, like I said, for my schedule. And as if y'all can see, I don't post every day, although Facebook's always like, you should post every day. You posted 2 more, and then you got 2 more interactions, and it's like, no duh, like, it's like, that's not deep analysis. It's like, but I can't be posting all the time, and that's not, it doesn't pay the bills, so I can't be doing that. But it's not all about the bills, and that's why I like posting content every now and then. right now, for example, a lot of QuickBooks, a lot of Excel. That's what I'm doing. And the PMs, the portfolio managers I work for at Bank of America Private Bank, they did very well in their individual portfolios. They managed an internal strategy called GOP, Global Opportunities Fund, and it was well known within the bank that this fund did very well. And so, so I learned a lot from them in terms of how to evaluate a stock and appreciate it really for its growth potential. So that was my actually probably one of my first exposures to modern investing. I wouldn't even call it value investing. It's just modern investing. So like some people call it growth investing, value investing. I don't. If you talk to Warren Buffett, he'd say it's all investing. It's just some are. I would actually separate it to be like traditional, traditional value investor versus modern day value investor. I mean, if I had to make a demarcation somewhere, which I don't think is, I think it just confuses people. I think it confuses things actually. So, yeah, I don't share my screen. I'm not going to share my screen or nothing because it is not necessary. Like I said, I hope this is all saved and recorded and people can rewatch it and see what I do, if that's what they're interested in. And I always say, man, I wish I could help folks, especially the young folks who ask me questions more. And I've had people reach out to me and say, hey, I want to talk stocks with you, which I don't do that. I don't really sit down and talk stocks with people. I manage money for people. And I'll update you directionally in terms of, where things are at. But, I don't sit here and talk about individual stocks with people because it's a dangerous game. If you don't know what you're doing, it's a dangerous game. I'm just so shocked still that people who call into Jim Cramer's show and is like, I don't know what a balance sheet is. And Jim Cramer's like, okay, great. Like right up my alley, hopefully you read my new book. And I'm just like, that is nuts. I'm just learning how to read a balance sheet. So Jim likes to say, oh, it's just these elitist people who don't want you to invest. But it's like, it's scary to me when people call in and they don't know financial statements and they say, I'm investing. My whole thing is, you got to try it for yourself and build a paper portfolio. Build a paper portfolio first. See how you do, without risking real capital. And if you're doing well, then feel free to risk some capital. And I think people get so impatient and feeling like they're, fear of missing out, that they jump all in, go all in, and there's better ways of learning than burning yourself. You can read about other people's failures and learn from them, you know. Um, but by indexing, you beat, by the way, by indexing, you beat like 94% of managers, 95% of managers, professional managers, not just amateurs. And so when people come up to me and they're like, they don't come up to me, but I can overhear them too. Wow, I picked this really good stock, yada, 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 or they won on this one thing. And it's like, I don't know how big of that, how large of that investment, is in relation to your net worth. Number one, it could have been $2. The rest of your portfolio might have done terrible, right? A lot of people, and I can go, but my point is, I don't want to over romanticize, what individual investors can do. And I don't say that because I think I'm better than people. I say that because I'm in it. I know how difficult it is, So, and uh, I've worked at, you know, in money management for a while, and I know how difficult it is, And I um, uh, was in client meetings where we review performances from not only our internal portfolio managers, but uh, external portfolio managers and so on and so forth as well. And it's just, it's really, really difficult. And so um, yeah, but I would say, the basics of it is you should understand accounting. I mean, like income statement, balance sheet, cash flow statement, those things should, picking up an annual report, these type of things, like, you should feel very comfortable with. And it's funny because even as a portfolio manager at U.S. Trust, it was it was tough. We managed so much money. It was, I wasn't always opening up annual reports, even though I wanted to. But a lot of that was done by the analysts and the chief investment office and stuff like that. And so, um, you know, uh, it made our jobs a lot easier though. But with that said, I mean, if you don't have all those resources, yeah, you're going to have to do that on your own. And if you're not comfortable with financial statements, like that caller who called in to Jim Cramer, and he's apparently in his books, he's teaching like how to read a balance sheet for the first time. And I'm just like, that's bizarre and it's dangerous. And it can be heartbreaking when, um, you lose your life savings or something. So there's just so many ways, and the way the industry works, it's creating new products to sell to people that don't necessarily make money. And so there's always a new novel product. Nowadays there's these like triple leverage individual stock ETFs that you can buy, and it's just insanity to me that people would risk capital doing that. Bo Nix against Josh Allen. Everybody's saying it's Josh Allen's year. He doesn't have Mahomes in front of him, and Jordan Love and all these other quarterbacks that have kind of held him back in the past. So a lot of expectations on, but there's so many, like Bo Nix isn't. He's just young. He's not a pushover. Touchdown, Denver. $16-10. Oh, good pass. Bo Nix to, I don't know who number 17 is. Oh my gosh. Got hit hard too. Who's number 17? I don't know. Second quarter, 22 seconds left. You heard that cha-ching? That is a QuickBook sound. Mm. Empty coffee cup. It's 3 anyway. Ooh, Josh Allen fumbled. Recovered by Denver. Holy moly. Dude, what the heck? Who hit him? He runs out the pocket. Oh my gosh. So Buffalo almost recovers. Couldn't recover it. Big 76 couldn't recover it. Edwards. And this other dude recovers it on Denver. Okay, so it's before the half, so he's going to go for a field goal. 2 seconds left. 50-yard attempt. All right, let's see this. Oh, he's going to hit it. Yeah, he hit it. Oh, boy. Alrighty. Yeah, I took not took for granted. I just you do kind of take for granted, but the resources that some of these big institutional money managers is vast. I mean, I remember I made a call to a department that worked on corporate actions only. It's just if you want to move money, you call your money mover people. If you want to, I obviously did the trades, and as an associate, and I also assisted in backing up the portfolio managers when they were out. But it was um, it was like so many resources, that you could leverage to make your job easier and focus on um, I guess your main job. Um, at the same time, you know, it was a lot of client facing stuff too. So, um, a lot of the research part, which I enjoy the most, was done by the CIO office. Although we had to do a lot of that stuff locally as well. Um, I think clients will always demand it, and they like talking about it, and you know, um, but I have some sad stories too. It's like with no names or no banks, but or no managers, but I had a client who was adamant that this particular security, I won't say which one, was held for the portfolio. I thought it was overvalued, but it didn't matter what I said. Um, you know, and some managers, may not know what they're talking about. Some managers do, but I think for the most part, a good manager will tell you to stay diversified and don't fall in love with the stock, and especially if you just started managing money. Now, this person had just inherited money, and they were going to manage it themselves and tell the money manager, what they wanted, right? So they're called directed trades, and so they wanted to hold a particular security, and obviously, I left um, for a multitude of reasons, but the main reason being I wanted to do it on my own, which is a dream for a lot of people. Working in money management, it's usually the sales folks who start their own firms and things like that, and rarely the money managers, uh, the portfolio managers. But I've seen that as well. But I tracked that stock after the fact, and it has not done well. And it's sad because I know that was a it wasn't an insignificant part of this person's wealth, so, um, that's why, like, I've seen yeah, it's all fun and games when you're making money. It's all fun and games when the stock is going up, but when the music stops and things reverse, it's, painful. Um, and I guess if someone has never experienced that, they will never know. And some people would rather have, burn their hand on the stove rather than hearing people say, "Hey, that's hot. You shouldn't touch it." So some people just can't learn vicariously through others, and they'd rather make the mistake themselves. I would say if you have to make a mistake, that it ideally it'd be a smaller mistake that doesn't completely take you out, and that's why I mean like paper portfolio, or if you're managing a small, if you really want to manage money and that's the only way you learn, risk a little bit of capital, see how you do, and then go from there. But you got to be honest with yourself. You can't like some people, they'll sell all their, uh, they'll sell and buy, and by the end of the year, it's like they don't really know, um, what their performance was. They don't pay attention to what the losses were. They don't pay attention to what the gains were. Um, for uh, for the year, and sometimes you know it's sometimes they add money, they subtract money in the middle of the year, and some online brokerages account for that, some don't. Like for example, if you move accounts at Merrill Edge, for example, in the middle of the year, they're going to say the whole year was this performance, even though it was moved for half the year. So you have a half a year's performance, but Merrill will count that as a whole year, for example. So you can't always rely on that, and you really have to keep track of your own trades, and uh, that's how you can tell what your performance is. So it's it can be tricky, and people can easily fool themselves into thinking they're really good money managers because they won on one big stock and they sold the others and they don't even remember the others. So let's say they put 5,000 in, they put they invest, let's say, a dollar into some hot stock that quadrupled or 10 times it 10x'd itself in a day. You know, um, that's all they remember for some reason. That's all they talk about. They don't talk about the other 99% of their funds or the other, um, you know, $4,999 if you had 5,000 or 10,000, whatever I said. But they don't talk about that other portion, and they don't talk about the portion that they didn't even invest. Um, so it's really hard to trust anybody's personal accounts of what they've achieved returns wise. Um, so I'd be careful listening to people's returns. Um, and you know, especially in your personal network. So like friends, families, all that. It's just there's you don't know how they're accounting for that. But usually it's just when you hear a stock that someone bought, it's just like, or posted online even, it's like, oh, I bought this and it went up 1,000,000% and I'm good, like, or in Jim Cramer's case, he likes to call out a particular stock that he always, vouches for, and he's made everybody millionaires, and you know, he's made some bad calls, and I didn't see him review those in his program where he celebrated, I think, 30 years or 20 years. So like I said, this is not for me to bomb on Jim Cramer. I'm just like, um, certain things may not be good for your financial health. That's the best way to say it. I do have to say, like, with Warren Buffett officially retiring, and his partner in crime, Charlie Munger, passing, it is, there was not a documentary, but I guess an interview on CNBC, um, A Life and Legacy of Warren Buffett. It was really good. Um, but yeah, I mean, I made sort of a short video on him and my thoughts on his impact. But yeah, it is really truly an end of an era. Um, in terms of, I think he's inspired and taught so many. As an MBA student, I was able to um, go up to Omaha and actually not officially meet him because it was like a group of us. Um, but essentially, he took out the whole group to dinner when he was healthy. He doesn't do them anymore, from what I understand. But I had that opportunity, and I've been to one of his annual meetings, and you know, he's a legend. And I said a few nice words, but I mean, I think his impact on investing and kind of what he's done for the investing world and being that, I think they said Becky Quick was saying, a voice of calm, you know, when things were crazy in like 2008, 2009. Um, I don't know, who's going to take that spot. To be quite honest, right now, in terms of just a solid understanding of business and investments. Um, he's a one of one. He's a one of one, and he's done quite a bit in philanthropy as well. That I think today's whatever trillionaires can learn a lot from. Elon Musk. This is not political. It's just, I think he set up like a really small foundation, but it's still uh, nothing compared to his wealth. And in fact, he wants more money, and it always changes, right? He wants more money so that now he's saying so he can keep Tesla or something like that. Before, he wanted more money so that he can populate Mars, and he found that people found that, I think, absurd. So he's changed his story and turned into, this is how I keep my company. So, it's I think Buffett will be remembered not only for his investment acumen and teaching so many people and inspiring so many people, including me, but his philanthropy and his outlook on giving back, as well. And he's inspired other very wealthy people. Um, and it's funny, in Elon's book, his biography, I guess Bill Gates tried to get Elon to donate his money, and he wouldn't because he found out Bill Gates was um, short his stock, and so that pissed him off, and he didn't want to, give away his money, in the manner that Bill Gates was, you know, trying to encourage him to. So he still hasn't made much progress on it, and I think to hear him just want to get wealthier is sickening to me. I mean, I think he wants to be the world's first trillionaire if he's not already there. He got a huge pay package and things like that, and so for some people, it's just never enough. You know, so um, but yeah, the example that Warren set is incredible. Really, really incredible. Denver scores again, another field goal. I'm gonna get another cup of coffee. I'll be right back. What's up? Ooh, somebody just scored on the Bills. 16-23. Denver's up. Third quarter, 6 minutes and 50 seconds. I have YouTube TV, and I love it, but it's a little delayed. Oops, my computer just went on standby. Sorry. Cool, I'm back on. Denver's up. Yeah, Niners are playing in what, an hour and a half? It's cool. Probably watch a little bit of that. You know, I might do some work while I watch that. We'll see what's up. We'll see what's up. We'll see if how bad it gets or how good it gets. Obviously, I hope the Niners win, but you know, I don't know if people know this, but a lot of the 49ers owners are Notre Dame alum. So it's like um, it's been passed on, and even their son, their father, and their sons went to Notre Dame. And I guess I'd go on campus, and there'd be this DeBartolo building and things like that, and I was like, didn't realize like these were the owners of the 49ers, and even for our NBA networking events, we were at Levi Stadium, and they were so nice. They had like I feel like it was a private event for us, and they were like, yeah, they were so nice. They were like, you want to go through the, you know, check out the museums and things like that. And I was like, geez, like, you know, and I actually said no for whatever reason. And, but I didn't realize like it was a special, I feel like it was a special thing for us. You know, so, you know, as I found that out, well, obviously Montana went to Notre Dame as well, and he was a big time quarter. But that was before my time, so that was before uh, that was before I got. I mean, I paid attention to them, and you know my peers started paying attention. You know, at least from what I remember from the Steve Young days. But then I got, you know, so I've always paid attention to the Niners, and I love watching them win. And but I like to say they are my adopted city. San Francisco is my adopted city. It's not my main, you know, Sacramento and Sacramento Kings are, but you know, San Francisco is not far away. So hope they can pull it off again. I hope they can pull it off again. But yeah, there's some, you know, deep Notre Dame connections as far as the 49ers and uh, my alma mater. So even more of a reason to be a fan is what I'm saying. All right, yeah, just double checking everything line by line, you know. Intercepted. Bo Nix just threw it right to the Bills, right in his hands. That's interesting. Denver just got it back. Oh, Josh Allen, man. Let's see the replay. Josh throws it deep and then gets picked off. My financial calculator. Yeah, sometimes I'll go through some stuff and I'll be like, yeah, how'd I, I'll make a sale or a buy, and then I like to see how I did since then, um, and basically, not get hung up over mistakes, but if I, made a mistake, why, and how do I improve for next time, you know? So, but I think Warren said it, if the game was that easy and everybody was hitting a hole in one all the time, it wouldn't be much of a game. But you love it and you like it because it is a challenge. It is really, it's very difficult. It's a very difficult game. And anybody, I think people who are like, and this is not to say anything, but if you're making money and the market's going up and you're a trader, like a day trader, that's what you would expect to happen. I would say I'm a long-term investor. I do make tactical trades, um, as did most of the institution, many of the money managers that I work for. Um, you do make tactical trades, obviously, but you have a long-term direction. Now, people who are fully just trading, um, like last year or the last 3 years, it's difficult to know the skill of a trader if the market's always going up, like for the past 3 years. You could be good, you could be bad, but you won't know until things turn. You know, so Graham liked to say he doesn't, he tries to stay away from short term trading because you know he can't tell whether or not that's skill or not. And so I know I've had, you know, people like to, but it's exciting. I get it. It's exciting. It's just, to me, it's not very profitable. Um, and anybody who's bragging about great returns in the past 3 years, it's, there's really no telling whether or not that's skillful or not. So I'd be careful when, you hear people talk about that. Like, again, you know, I'm a big believer in staying diversified, indexing, and if you are going to invest in individual securities, to test yourself first. But just know, like, you can learn about income statements and balance sheets. Like, Charlie Munger had no formal business training, but I think he worked really hard at it to get the accounting knowledge. And by the way, well, he was successful in his own right, but he had some mentorship from one of the best investors in the world as well. You have to understand that. So I wouldn't say it's a common thing to just have no, and you don't even need like formal business training as in a degree, but you know, can you learn a language on your own? Yes. You know, does it help to take a course and have an instructor help you? Sure. So if if there's anything I could recommend at all, it would be to either learn on your own some accounting or take a course on it. You know, I took accounting classes, difficult ones at Notre Dame, just to take them. And there were professors that are like, it doesn't even really matter if you they really encourage you to, I guess, just take the class. But knowing, understanding that, hey, these students are going to try their hardest. They're smart kids. They're probably not going to do well because it's a really hard accounting class, but you know, um, it'll be worth the effort. And so I would take really difficult accounting classes at Notre Dame, even though I didn't have to. And I didn't do bad, but you know, I underestimated a lot of these classes at Notre Dame because I had taken them at UC Davis. But different schools, different caliber of, I would say, business programs, and but accounting is pretty universal. It's just at that point I was 28, so I was like, I had a lot of um, sort of business experience under my belt at that point, and so I didn't know how much the classes were going to help. But what Notre Dame did help me with was, I think, the opportunity with Bank of America, because Bank of America recruited on campus at the time. So it was a great place to meet recruiters and network and things like that. So that helped tremendously. I would say the classes were helpful too. I mean, that's why I went there. I didn't want to just go to some place that would just, give me a degree. I earned it. I mean, there were classes I took. Again, I underestimated them when I was managing money. That I was, the professors would tell me, I'm gonna fail you. Like, if you don't try harder, you're at risk. And so I had this really bad habit of, like, and again, it was because my first love is managing money, so that's what I did. And I had this really bad habit of, like, before finals, I would, like, jam everything in. I read what Bill Gates's biography, self-written, but and then he'd do the same thing at, I guess, Harvard. But he tried that with OChem and completely failed. So, if any of the if any young college kids are watching, please don't do that in your science classes. But for my business classes, because again, I already have familiarity with it, especially in investments. And so I had this really bad habit of just like doing an all-nighter, you know, and then passing the tests, going in there with no sleep and passing the test. But I made life so much harder on myself doing that. It's just, um, I was having so much fun managing money that, I put everything to the wayside. And it wasn't until I got to my investment classes, which I didn't know this, but you had to take all these prerequisites before getting into investment classes. And I was like, you know, I wanted to do investments and I didn't think there was any prerequisites before then. And I would say this, it's the same thing. If you love investments, like don't go to like investment banking first and then work your way to investments, right? Or don't think you got to go to sell side first. That's what they call it, sell side, which is investment banking or sell side analyst, and then go to buy side. You know, just get into buy side somehow. Start networking. There's no like path. So that's why it's like I was fortunate. Actually, the role I applied to that was in money management in U.S. Trust, I thought was a sales role because I was really good at sales. So I applied and I thought it was a sales role, and then I realized it was an investment management role, and I was like, oh, that's even better. you know, and so it worked out, and so again, so glad I got the opportunity, and um, I didn't care what people thought. I was taking a step back or whatever. I had to do what I really really liked, and loved, whether it was work or school or whatever else. Um, but yeah, I would. Uh, I didn't. Um, well, I got used to it. I got used to it to the point where I could pass the classes basically on. I think they call it. I think they give you a week of like no classes, but I would just study the night before. I would just pull all nighters the night before. Sometimes I'd have to like do a couple nights like that. Um, but you know, I knew enough to get by, and I already had a familiarity and background with it, so I wouldn't, you know, so I wouldn't recommend that for everybody. But that's what I did, and fortunately, but like I said, it wasn't without some close calls, and I did have some heart to hearts with some professors. I won't say who, but you know, um, but I knew what I liked. I knew what I loved, and I think, you know, uh, yeah, I would encourage anybody who has a passion for things to pursue that passion. Um, Good run. First down for the Bills. I think Denver just scored again. I wasn't paying attention. And thanks for the folks who dropped in. I saw a couple people drop in. And if you're viewing my live and you're bored as heck, this is what I do. This is what I do. But it's not just now, but it gives me the opportunity when I have an idea to share, I can just share it, and people can click through it later. I don't have to sit here and edit it. Um, that tends to discourage me from posting at all because it just doesn't fit with my schedule. And like I said, I have to focus on what pays the bills, and managing money is what pays the bills for me. So it's like, why not do a stream where I'm just doing my thing? So I mean, it's what I do. You know but my hope is when I'm sharing some knowledge or whatever it is, because there's so many things I want to share, and it's in the moment. Um that it's a lot easier to do. Well, I think on a live without needing to edit it. It's just, you know, it's not this like super exciting thing all the time. Holy crud. Bill's breaking out. Is it a punt return or a kickoff return? Good field position. Okay, pass. It was a pass. Dang, big play. Oof. Big play. They're in scoring position now. Khalil Shakir was who just made that big play. Oh, scored. Ah, that's a big play. Dalton Kincaid. I used to know these players a lot better when I played fantasy football. When I was doing fantasy football. It's a nice throw. (24-23).
Sandeep, why do you?
Yes, I am checking my phone. I don't usually check my phone when I'm on breaks and stuff, but like while I'm working, because you get drawn in. I mean, that's the whole thing of social media. It's supposed to be kind of addicting. I mean, obviously, if you're watching this live, I think you can just look at the transcript, see where I'm talking, and fast forward to that and see if there's any content that you like and that you want to listen to. That's helpful. But I've reviewed a few things today. Trying to find if there's like an upload limit on YouTube. I don't know how any of this stuff works, but well, you see, you can do all this stuff. You can create live markers. Dang, Bills are up by 1 point. Fourth quarter. Damn, dude, they're driving. That was a helicopter. If y'all don't know, um, you know, this is but yeah, that was a helicopter. Yeah, but I've been buying international stocks and some. I mean, the majority of the portfolio is in the U.S. Um, so the fund is still the funds that I manage. Um, although it's growing, it's not a huge amount yet. It's still relatively small, so I'm still able to find a lot of opportunities here in the U.S. Mostly in smaller companies because there's just not as much attention on the smaller companies. Unfortunately, last year was a big year for the biggest companies, and it was exceedingly narrow. So, very a narrow set of companies won, and it's the value, I would say, in those companies is has decreased in my view. So, um, but yeah, just given my capital size, the amount of capital that I manage right now, um, I should be able to find opportunities, you know, um, and I am, and so And I would say the everyday investor should feel the same way. They should feel like they can continuously contribute to an index fund and do fine. Um, it's just, and I've reviewed this in my previous podcast. If you're in a 401k, usually there's all these cute funds and that you can buy typically. Yeah, and so you just don't want to get overly creative on uh, your investments as far as that's concerned, and especially if you can't, if you don't have the time. Typically, if it's in a 401k, you can only buy funds, um, or a retirement account or whatever it is. And I guess some retirement accounts you can kind of tell that retirement account when you're going to retire, and they'll invest based on that. And um, usually starts with a certain amount of bonds, and it goes up from there as you age, the bond allocation. But if you're a conservative investor, it may start off with 30 to 40% bonds, and um, that's not entirely a bad thing. I mean, you know, but I've reviewed it in the past. I don't know. It's usually when you're picking those portfolios, I guess aged based portfolios, it's even the funds themselves are not indexed. It's usually like an actively managed fund, which is still better than individual securities in my view. And your retirement account should have some good options, but again, every single one of the retirement accounts, you can choose an index fund if you want, I believe. But that can be too complicated. It might just be easier for you to choose the target date fund and then just let it go on automatic. And those don't do terrible based on what I see. I would just continuously contribute to it. And if you can, put it in an index fund. I would say the bonds, the same thing. You can choose bond index funds as well. So I hear when there's a big play. Josh Allen ran for it. It seems like a first down. He got hit big. Oh my gosh, that was a huge hit. Holy crud. Oh my gosh, Bills up by 1 and in scoring position. He might do it. It's supposed to be his year. Scoring position. Oh, what the? He made it. He made the pass. Touchdown. I think it hit the ground. I'm pretty sure it hit the ground. Yeah, it hit the ground first. Yep. Checking some messages. Dude, they're up by 4 now. I think they made a field goal or something. Nix is I guess, the hot young quarterback. Josh Allen, if anything, it's his time. Just him being in the league for as long as he is. So we'll see. Bills playing some good defense. Big throw to Sutton. Dang. Watching the football game as well, doing working and watching. That's how I stay updated with sports and all that. Sometimes I'll watch and work at the same time. Um, but yeah, just continuing to work on some accounting, working in QuickBooks, and checking all the entries really. So also trying to catch the game, and the Niners play in about half an hour. So. But I can't. I'm not. Yeah. I'm the 2 minutes left. The Bills might take it. Um. And I'll post this. I'll try to post it. I don't know what YouTube can do, but I'll try to post the whole stream. Just trying to lock in, and like I said, double check all these. Double check all the accounting. Go over all my trades. I'm doing a lot of like end of year stuff. Wrapping up the year. And taxes are what, March 15th, so I gotta make sure partnership tax returns are filed before then, and they're all sent out before then. Because what I found out recently is there are no extensions to K1s, and so I got to get those out. Even estimates is fine. So, but yeah, that's what I've tried to communicate to my partners. Bills may take this under 2 minutes. Bills are up by 4, and Denver's having a hard time getting downfield. So heavy Excel, working a lot with Excel, right now. You know, that's another thing I recommend people who want to get in the business do is get pretty good with Excel. You don't have to be like an Excel master, but I got really good with pivot tables and things of that nature, and it seems to help. Um, I guess pivot tables and VLOOKUPs. I don't do any macros. I don't mess with the macros. I don't. I never had to. So, but it's funny because we would work on because there were some people who were consultants before, and they were really good in Excel in terms of formatting, making it look pretty. Really good with VLOOKUPs and pivot tables, but I didn't learn it. Bo Nix just slid and got hit. Oh, no flag. It's funny, they called one last week and on Jalen Hurts when Jalen Hurts slid and got hit. Okay, that wasn't as bad. But I didn't learn VLOOKUPs and pivot tables until until I started working at Bank of America. Actually, then my mind, it just doesn't connect things when there's not a real tangible need for it. And so when my job required it, then I learned it. So to everybody that school is not your thing, you can still make it work after school. So if you needed words of encouragement and you're not a classroom person, there's hope for you. Bo Nix bombs it. Oh, it's caught. Oh, he got hurt. Come on, man. You trying to make it dramatic. Mims. He touchdown. Woo! Now he's on the ground. Oh my Lord, that was a bomb. Two feet in. Oh, it doesn't matter. Ball crosses. Oh, he hit a camera. Dude, those cameras, I hear it takes people out. He hit a camera. Oh, yeah, that'll hurt. Dude, I've heard of especially in NBA courts, they don't have as much room. I've heard some players, I mean, if you Google it, they get injured badly from some of these camera hits. Well, at least we get a good angle on the catch. Ooh, that was a crazy catch. My goodness. So Denver might win. This is a nice game. By the way, if you're a college football fan, Indiana versus Miami, Notre Dame should be in that game. Notre Dame should have at least been in the playoffs. And I could go on and on about it, but I mean, people are saying Miami should have made it. I think Notre Dame should have made it over Alabama and potentially Miami because they improved dramatically over the season. And they've, the CFP committee's always given credit for improvement over the season. And Notre Dame, their first game was against Miami, who's in the national championship right now. And they lost by 3, and then they lost by 1 against Texas A&M. And Texas lost to Miami as well. So it's like, to say that Notre Dame didn't belong in the playoffs is baloney. Baloney. But the reason why I might watch on Monday is because Marcus Freeman is going to be announcing as a guest on Monday. And I haven't been watching the other games because I've been so angry with how that's turned out, because I feel like Notre Dame could have won this year for sure. They beat Indiana last year. They whooped them. So they should have had a chance this year, and they didn't even get the chance. And it's just silly because the Pop-Tarts Bowl was going to be like Mormons versus Catholics, BYU versus Notre Dame, and somebody must have had a good laugh with it. And I recently found out that Rubio and I guess Donald Trump will be at the championship game. So, It is what it is. Rubio's a Miami alum, so it is what it is. I mean, next year, but this year we had Jeremiah Love, so and he's like a Heisman candidate, But I think CJ Carr is going to be a Heisman candidate next year as well. So, and uh, the people who 30-27, Denver's up, 50 seconds left. Josh Allen has a chance to bring it back. Like I said, there's a slight delay. I don't care. It's as good as live for me. And then I try to lock in and do some work as well. But, I've got so much stuff to do as far as running the business that I do have to take my weekends to put in some more hours, because during the week it's crazy enough to maintain the portfolio. Then you're looking for investments, and then you've got running the business. I'd say there's like those three main things. And then, of course, there's also interacting and answering any client calls. But that tends to get busier towards end of year and every quarter. That's when it gets really busy. But otherwise, the way I've set up is to be able to maximize my time managing the portfolio well. And so game-winning drive, 2nd and 1, 2 timeouts each. Denver's up 30-27. Field goal kicker getting ready. In Denver territory. No, in Bills territory. They're not in Denver territory yet. So let's see what happens. Airs it out. Catch. Caught. Okay, now that was a big pass. Oh, my goodness. Are they going to call it off? He gets 1 foot in. Didn't count. I guess he didn't get both feet in. It's false start. Bills are fighting just to tie it up. I got a question from Steve. And he asks, thoughts on the silver market? Okay, so here are my thoughts on and my bad, Steve, I didn't see this earlier. I'll message you right now. Steve, I mean, it says Steve, so Josh Allen airs it out. Totally misses the dude. My bad. I'm like doing a little bit of everything. So, I work. It's a Saturday, you know what I mean? So trying to, not always super, super focused on a Saturday. A lateral. Oh, oh, snap. Um, so I don't know who's still in here, but a pass and then a lateral. Oh, it got hit. The pass got hit by a defender, still caught it, and then lateraled it. That is nuts. Thoughts on the silver market? So yeah, I mean, I kind of commented on that earlier. I think there's a reason why the gold and silver market um, has rallied as much as it has. The dollar. I think it'll. I mean, I don't think inflation's out of control. Inflation, looks okay. It's just airs it out. Nope. It's just it's one of those whatever alternative assets. Um, oh, okay. Yo. Okay, so Steve, my buddy Steve from high school, man, we played JV basketball together. So silver is one of the it's a commodity in terms of a precious metal, and I don't want to I don't want to comment on whether I think it's a good buy or not. I try to stay away from that, but um, I think that it's okay. I can post the live as well, or just send you the. But yeah, it's a precious metal, and there's a reason why it's been rallying is because the dollar has been um, a lot of people are worried about inflation, and with all the talk about lowering interest rates, that tends to weaken the dollar, and so people tend to run to gold and silver to you know hide from inflation. And so um, the problem with gold and silver is they're not cash flowing assets, as in so I buy stocks, and these companies produce earnings. um, oh. Dude, yeah. Yeah, I don't yeah, I'm not I'm probably not the best to answer that in terms of, um, you know, uh, profits. Yeah, dude, I mean, I don't know. I can't answer in terms of I'm always a fan of, holding a little bit. It depends on how much of your net worth it's, you know, you have as a percentage of your net worth. So in general, you know people may hedge the dollar with a little bit of gold and silver. So if it's like a huge part of your portfolio, now that it's run up so much, uh it's it may be um it may be a good idea to I'm a big fan of stocks and bonds, right? In terms of especially the especially index funds, and so the S&P 500, things of that nature. And so I'd hold I'm I I'd hold a small amount, I guess, in terms of um, precious metals and things of that nature. But I don't know if I'd I'd go crazy on it. You know, in terms of continuing to, if it's a big portion of your net worth, I'd be careful because it's not a cash flowing asset. The value of gold and silver is dependent on what um, people want to pay for it. So it's actually I don't. So actually, I can't tell you if it's overvalued or not. I could tell you it's a fear indicator. If people think there's going to be inflation and the dollar is going to weaken, then they're going to buy gold and silver. And so, um, I mean, if you have like if it's like 50% of your net worth, that might be a little bit too much, you know. So you know, um, uh, a hedge position is typically 1 to 2% of your portfolio, and that's just in general terms. And so I don't want to get into too much. Uh, oh, oh, I see. Yeah, okay. If it's a smaller percentage, I don't know. I mean, I would say this, man, 2026, because it's run up a lot, dude. And whenever you see things run up that much, and you don't really know how to value, I always get nervous. But I would say precious metals in general, um, you know, it's a hedge on whether you think the dollar will weaken or not, and how strong you think the dollar is going to be. In my view, like with interest rates, you know, probably going down, and uh, yeah, I mean, I don't blame you. How about that? I don't blame you, Steve. I don't blame you. I don't want to get in trouble and be like, you should buy or sell it right now, because I could be wrong. You know what I mean? I don't want to advise you like that. But I could see your thinking. Um, and I'm not, yeah, I wouldn't blame you for thinking like that. How about that? And because it's run up a lot, dude. It's run up a lot, and you know, but it is, like 2026. I think we're going to continue to run deficits. We're going, interest rates are going to continue to be lowered. So, but to your point, if it's grown into a bigger percentage than let's say 2%, maybe you trim it back to 2%. To back to a hedge position, or something like that. So, or like you said, if it's gonna, you know, yeah, dude, yeah, dude, but hey, man, congrats on holding it. you know, dude. I mean, it has, dude. It has. It's gone nuts, dude. So, and gold has too. So, um, you know, it's just hard to value. There's really, it's really, it's just dependent on what people think about it, and whatever people think about it, that's what happens. So I can't definitively say if it's over or undervalued, because it just depends on what you think the other person's going to do, which that's obviously not my game. But I I still am I'm a fan of, if you're not sure, you could hold a small position, or a hedge position, let's just say, of 2% of your net worth in um, hedging against the dollar and precious metals, let's just say. So, but yeah, man, that's a nice win for you, man. Congrats on that. It definitely, if you said it's like a good 10% of your net worth, that's when I would say it's dangerous, and that's probably not my game. Definitely not my game, in terms of precious metals. But um, it's not a bad idea to maybe hedge against the dollar, you know. So it's yeah, 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 yeah. um, yeah. Well, I mean, I've talked to people, man. I've managed money for people who hold alternative. I put it in the alternative assets category, precious metals. I would say, um, even Bitcoin. People put half their net worth in it, dude. So, you know, I don't know. That's I'm saying for me it's a it's not the game I like to play. I like stocks. I like stocks. I like index funds. But yeah, if you're gonna hold stuff, to hedge against the dollar, I wouldn't blame you. And if you want to take profits off the table, I wouldn't blame you either. So um, great question though, man. And like I said, man, congrats. Yeah, yeah, yeah. I mean, if you wanna, like, let's say, rebalance and buy, an index fund of some sort, um, that in the last 3 years, it's averaged what, 20 a little bit over 20% a year, dude. In the last 3 years. It doesn't mean it's gonna continue like that. I actually don't think it will, but, um, but I recommend for everybody if they can, you contribute, every paycheck or, on a regular basis to an S&P 500, and you're going to beat 95% of investors, professional investors. So, um, yeah, I would say I'm much more comfortable with buying companies that are growing and growing their earnings every year. And with silver, I actually don't know how to value it, so I couldn't tell you if it's high or not. Right? I would just say if you want to hold it as a hedge position, I wouldn't blame you. And you know, a hedge position is typically 2% of your portfolio, something like that. Because if it does go crazy, you have some of it. If and if it doesn't, you don't lose too much. So, but hey, man, that's a nice question, man. Really good question. So we should get on the phone and or grab a beer one of these days, man. We're both in SAC now, so um, but appreciate the question, bro. And like I said, man, congrats on that. 30-30, by the way, overtime, dude. Bills in Denver. This is a good game. It's gonna run into the Niners game. Oh, my bad, dude. Yeah, dude. Yeah, dude. Absolutely, dude. Let's grab some lunch, dinner, whatever, man. I'm down. Great game, hella. Yeah, dude. So yeah, man. Let's do it, man. I don't know if you're a Kings fan, but maybe a Kings game or yeah, we can grab a bite too. Obviously, I don't know if you drink coffee, but or grab a bite, man. I'm down. 4 years sober. Congrats, man. Congrats. That's really cool, man. Um, I just had I just had a friend pass away, man. From liver failure. I don't know if you heard of the person, but from drinking too much. So congrats on that, dude. But yeah, you got it. Yeah, congrats. But yeah, let's grab lunch or something. Huge stuff. Yeah, dude. 4th and 11. So I'm on YouTube. I have YouTube TV, so it's a little bit delayed, but it's by maybe 30 seconds. But yeah, that was a huge stop for sure. Well, yeah, huge stop. It's Josh Allen's time, man. For sure, dude. Yeah, man. You got it, man. Hey, man, thanks for joining, man. Let me know if you have any other questions, dude. Yeah, dude. I think he will, man. I mean, he's supposed to be. Bo Nick's still too young, I guess. But dude, hey, you're in collectibles too, aren't you? I don't mean to go off topic here, but I think you're in collectibles as well, aren't you? Or I see some of your posts sometimes. I think that's pretty cool stuff too. But we could talk about it over dinner or something. Dude, I need to go. I've been thinking about going to one of your shows, bro. Because I mean, you know, hey, those are assets too, man. I didn't know you were so big in that, by the way. That's awesome. Well, that's what one of my heroes is Warren Buffett. He just recently retired, um, and he would say the same thing about like gold. He would say, gold isn't, what what's the use really? I mean, you can sit there and fondle it. He's that's how he thinks. He thinks kind of weird, but but it doesn't really produce cash flow, and so he's a big fan of cash flowing assets that produce earnings and then grow those earnings, um, or whatever. So he would view, I guess, precious metals as the same way, like they're just really shiny, right? Yeah, yeah. I mean, you know, but I think it's a great hedge against inflation, precious metals. Um, so I mean, even in one of his heroes, Benjamin Graham, he has a book called Intelligent Investor, and the updated commentary talks about holding that. Um, but yeah, there's very little use for it, and you know, you know, it's just a really shiny thing that historically people have loved to hold for whatever reason. They like to stuff it under the mattresses or whatever else, you know. Uh, but dude, yeah, man. Hey, man, it's good times, man. It's been a while, man. We, what we can eat is something at lunch or dinner. Looking forward to setting that up, man. Um, but yeah, and I want to go to one of your card shows, dude. I see the post, but I just haven't had a chance. I've been obviously working. Thanks, man. But yeah, huge stop on that. I don't know if you're gonna watch the Niner game, but that's gonna be that should be good too. Next one's in March. Okay. A couple more months. Yeah, dude. Totally. That'll be great. I mean, I'll be I don't know if it's gonna be after March 15th, but I should be good either way. I'll look for your posts or text you or something. Been a while since we even had a reunion. Um, yeah, the Niners are. Yeah. Seattle's good, man. Seattle's. You know, we'll see, man. That'll be cool though. Uh, they're getting, I think, Pearsall and Warner back. Do you do all types of cards, dude, or is it just is it specific type of cards? Okay, okay. I like them. I like my basketball cards, bro. Tom Brady, I guess, just opened up a collectible store. Dang, what? That's a cool niche. Okay. That's a super cool niche. I mean, I don't know anything about that, but pre-war boxing, man. Dude, those cards must be pretty because anything at that time period is hard to keep in good shape. I mean, I would think. Dude, that'd be sick, man. Y- that'd be sick. That's pretty cool that you interviewed that though. Ah, okay. Dang, Tom. Missed out on on Steve Lynn, man. Yeah, dude, I've always loved cards, and they just blown up, dude. They also produce no cash flow. Like to your point, it's a piece of cardboard. I don't get it, man, but but I do because like when we were younger, dude, I was dude, when we were in high school, it was like Kobe's draft class, and so everybody was like, you know, uh, in into collecting. I feel like, um, because it was such a good draft class, and I remember that's when I started actually collecting, um, and I was obsessed with it, dude. Oh yeah, dude. Yeah, that's what I'm saying, man. I mean, yeah, I mean, I think collectibles are an alternative asset too. Oh, did not get that pass, but yeah, dude. I mean, I see these charts of like, hey, this card, um, did better than the S&P 500 and all that. It's it's insane. I mean, I think they're cardboard, but some like a refractor, like I don't know what type of printer you have to have for that. Oh, airs it out. Oh, catches it. Oh, he intercepted it, dude. Holy crap. Yep, that's what I'm saying. So, yeah. No, I would agree, man. I mean, um, it's just, I mean, if you think about it, like, and then like a rookie card, it's like, you know, it's specific for that year, and they stop printing it. So, there's limited supply of rookie cards and things like that. Um, so I agree, man. Yeah, I agree. But yeah, I got to make it out to one of your shows, man, one of these days. So if anybody likes card collecting, Steve's your man. Oh no, he was down, dude. He was down. I think his knee hit the ground. Yeah. No, well, Denver has it back. I don't know if that was an interception or not, but Denver's got it back. Sounds good, man. Hey, man, have fun, dude. Yeah, I'm gonna turn on the Niners game as well. Have fun, man. Good chatting with you, man. We'll link up, man, soon. Hopefully. And congrats again, man, on 4 years, bro. Good chatting with you, man. Peace. Thanks for joining, man. I'm gonna put on the Niners game right now. Oh, it's next on Fox. Not on yet. Not on just yet. Oh man, I don't know what to watch. Niners are coming out right now. I'm gonna watch the Niners game. Hasn't started just yet, and then first and goal. Yeah, I'm gonna switch back to the Niners game. Okay. I'm gonna play this on my phone. Seahawks on my phone. Okay, the game hasn't started. Field goal is good. Denver wins. Holy moly. Josh Brown loses again. Yep, it'll be a tough game. Niners game is starting. in Seattle too. This is a tough game. Oh no, dude. Seattle just returned it. That is insane. First play of the game. Ah, he kicked him. Wow. It's not a good start. Huh. All right, y'all. I'm gonna watch this game. Not a good start for the Niners. Um, but there's still a lot of time left, so I'm gonna end the stream. And thanks for everybody who joined today or took a peek. And hope I think I'm gonna try to post it. I don't know how it all works, but and go from there.